Hello guys, Steezy Banks here from the Elotesians, Wavians, the wave traders. So today guys I'm going to be taking you through my free course. This course is for free for like Elo12 theory. I best believe that a lot of people out there can't afford the like paying for the courses and everything, but what I'm going to teach you on this free course is something that will like sustain you up until you make some few cash so that you can be able to buy other courses if you want to buy other courses. But I would recommend you to jump from one strategy to another. If you want Elo12, stick to Elo12. If you want price action, stick to price action. If you want smart money concepts, stick to that. But as for Elo12, I'll start by telling you the advantages of Elo12. Elo12 is the best strategy for me. I've tried a smart money concept, I've tried price action, I've tried BTMM, I've tried, what else did I try? I've tried indicators, I've tried a lot of things, guys. But none of those worked for me. I'm saying for me. But when I stumbled on Elo12, focused on Elo12, I'm seeing my trading going to the next level, and I do appreciate it. And also Elo12, it helps you to see literally like the bigger picture of the market. Each and every market moves in waves. We don't believe in manipulation. When you see your stop loss getting hit, it means you did a wrong counting, or you put your stop loss you didn't put your stop loss on a invalidation zone. Sharp. So Elo12 is the best because it gets to like you get to see the trends that a lot of traders can see, and the market structure of Elo12 is on top of, is out of this world. It's something that I do recommend some of you to use. So without me wasting much of your time, guys, let's get to it. So the first thing that we are going to do is we are going to take a sip. After taking a sip, let's get into it. So we have what we call a basic wave that I'm going to teach you right now. Trust me, guys, in Elo12 we have two moves that we trade. Only two moves, but you have to understand them. We have what we call an impulse, and we have what we call a correction. You have to understand them better, guys. You have to understand them like nobody's business. So an impulse consists of five waves. We have a motive wave and a corrective wave. So I'll start by explaining about the basic pattern, of the Elo12, which is the motive wave. The motive wave is literally simple, guys. It consists of five waves. These five waves are impulse, correction, and impulse. Impulse, it basically means an impulsive move which is going to the direction of the markets, and a correction move, the move that is going opposite that trend, certain trend that you are trading. So let's say we are trading from the uh, from the sellers markets. Then from sellers we start seeing buyers pushing price up. After seeing buyers pushing price up, this is the basic pattern of Elo12. Let me show you like this. So this is the basic pattern for Elo12 theory. So as you can see, we have higher high, higher low, higher low, and a higher high. But on Elo12 we don't mark these as high highs, higher lows. Yes, they are literally higher highs and higher lows, but when we are trading Elo12, we say this is wave 1 over here, this first move over here, this first move that I'm indicating, this one is a wave 1, and then this move that is going against the trend is wave 2, and this big move is called wave 3. This is the big deal. And then this one is called wave 4, and then this last one is called wave 5. You understand? This is wave 5. So after completing these waves end at a wave 5. So after wave 5 ends, we start a new trend to the downside. After getting a new trend to the downside, if price decides to continue with the trend, it does continue with the trend. But right now I want to like tell you the rules and guidelines of this basic pattern, which is the motive wave. It has five waves, and then wave 1 and wave 3 and wave 5 are impulse moves. These are the moves that we currently love to trade on a move like on a chart like this. And then we have what we call wave 2 and wave 3. Sorry, wave 2 and wave 4, they are literally corrections. They oppose the actual trend of the market. You get me? They oppose the actual move of the market. So we have rules and guidelines for this thing. We don't just come on the market and just mark these numbers. We have our certain rules. So let's talk about these rules. Let's talk about these rules. We have rules and guidelines. Let's say just rules and guidelines. So these rules and guidelines, the first rule is wave 2 must not retrace 100%. You must write this down. 100% of wave 1. Then second guideline, wave wave 3 must not be the shortest. Damn, bro, I don't know what's going on, but it is what it is. Must not be the shortest. Then the last, like the third guideline, wave 4 must not retrace back to end of wave 1. So these are the guidelines, gentlemen. You can copy these. Let me try to make them look big a bit. Okay, like this. So let me explain each and every guideline. So the first guideline says wave 2 must not retrace 100% of wave 1. Where is our wave 2? Wave 2 is this first move that is opposing against this move to the upside. It must not retrace back to 100%. The 100% level, we mean it should not retrace back to the end, like to the start of this wave, which is over here. It should not go below. It should play above, like areas like 68 level, areas like 75, like those you use Fibonacci retracement to measure these retracements. It must not come back to give you like a double bottom. If it does, then there is a certain wave that is going to be there. That's where you can see a lot of people doing a wrong counting. Sorry guys, my eye is moving below. I don't know if it's a bad luck or. Then second guideline goes like wave 3 must not be the shortest. This is wave 3. Wave 3 must not be the shortest from wave 1. You understand? Wave 1 must not be the longest than wave 3. So wave 3 must be the longest wave. You understand? It must be the longest wave. And wave 3 is the longest wave. And that's the wave that we literally love to trade as LOTians, because it gives you more opportunities. But it's kind of tricky to notice if it's a wave 3. You get to understand this better later in this course. But wave 5 is easy to trade, but short. It's a short trade. You understand? So we now on guideline 3. Wave 4 must not retrace back to end of wave 1. What do I mean by this? Wave 4 must not retrace back to this wave 1 end, which is here. It should not even touch or tap on this wave 1 on this wave 1 resistance. You understand? It must not retrace back to the end 1 So guys, this is a free course. Don't expect me to just chill, guys. I'm drinking, so don't judge me, guys. This is a free course. This is a free course, literally. So let me try to zoom a little bit deep. Damn. Okay, sure. So the wave 4 must not retrace back to the end of wave 1. You get me? That's it for the basic pattern. That's it for the basic pattern, guys.